You wake up, check your phone, and see the dollar dropped 2% overnight. Your savings account still shows the same number, but you just lost money while you were sleeping. How is that even possible? Here's what's wild: most people have no idea what actually makes their money worth anything. And that ignorance, it's costing you more than you think. My name is Raj, and I break down the financial systems that actually control your wealth. If you're someone who wants to understand why your paycheck buys less every year, make sure to hit that subscribe button and give this video a thumbs up if this helps you out. The supply and demand reality. Look, currency value boils down to one brutal truth. It's worth whatever people are willing to trade for it. The US dollar isn't backed by gold anymore. Since 1971, it's been a fiat currency, meaning its value comes from trust and economic fundamentals, not shiny metal in a vault. Here's the math that matters. According to the Federal Reserve's 2024 data, there are approximately $2.3 trillion physical dollars in circulation. But here's the kicker: the M2 money supply, which includes bank deposits and savings accounts, is over $21 trillion. When the Fed prints money or keeps interest rates low, they're flooding the market with supply. Basic economics says, when supply goes up and demand stays the same, value goes down. That's why your $100,000 in savings from 2020 only buys what $87,000 bought back then. Here's what most people don't realize: interest rates are the throttle on currency value. When the Federal Reserve raises interest rates, they make the dollar more attractive to foreign investors, because higher rates mean better returns on US bonds and savings. Let me show you something. In 2022, when the Fed raised rates from near 0 to 5.25%, the dollar surged 8% against other currencies. If you had $50,000 in euros at the start of that year, by December, it was worth only $46,000 in dollar terms. You didn't do anything wrong. The interest rate differential just destroyed your purchasing power. Now you might be thinking, but Raj, I don't trade currencies. Yeah, but you buy things, right? That iPhone you're watching this on? Those components came from China, Taiwan, Korea. When the dollar strengthens, Apple pays less for parts. When it weakens, they either raise prices or crush their margins. Either way, you feel it. The inflation connection. This is where it gets really interesting. Currency value and inflation are locked in a death spiral. According to the Bureau of Labor Statistics, U.S. inflation hit 9.1% in June 2022, the highest in 40 years. Meanwhile, the dollar's value against a basket of global currencies actually strengthened. How does that work? Here's the reality check: it's all relative. The US dollar can lose value domestically while gaining value internationally if other countries are inflating even faster. Turkey's lira lost 44% of its value in 2021 alone. Venezuela's bolivar? Basically worthless. The dollar looks amazing by comparison, even while your grocery bill doubled. Think of it like this. In a race to the bottom, the slowest loser wins. The dollar is losing purchasing power at 3 to 4% annually, but the euro and yen are losing it at 5 to 6%. You're still getting poorer, just slower than everyone else. The geopolitical wildcard. Here's the thing nobody talks about. Currency value is also a weapon. When Russia invaded Ukraine in 2022, Western sanctions immediately tanked the ruble by 30%. One executive order, and millions of Russians watched their life savings evaporate. According to the Atlantic Council, 60% of global reserves are still held in dollars. That's power. When the US sneezes, the global economy catches pneumonia. So, what do you actually do with this information? 3 moves starting today. First, stop holding 100% of your wealth in one currency. Open a multi-currency account or buy assets denominated in different currencies. Even 10 to 15% diversification matters. Second, invest in assets that float with currency changes. The S&P 500 companies earn 40% of revenue overseas according to FactSet. When the dollar weakens, their foreign earnings are worth more. Third, track the DXY, the dollar index. Takes 30 seconds on Google. When it's rising above 105, your dollars have more international buying power. Look, 5 years from now, you'll either be someone who understood this system and positioned themselves accordingly, or someone still confused about why everything costs more despite making the same salary. Currency devaluation is a silent tax that never stops. But unlike actual taxes, you can't complain to Congress about it. You can only protect yourself. The game is rigged, but at least now you know the rules. Drop a comment telling me which currency you think will strengthen most in 2026. And if this opened your eyes, smash that like button.